Hello guys, welcome to Trading Parrot. It's 1 p.m. in the UK and Bitcoin has already managed to put a new low relative to the lows of December the 5th. In today's video, I'll give you an update on the price action of Bitcoin, including the breakdown signal that we had on the 4-hour time frame, an analysis on the daily based on volume range. I'll cover the CME gap that we have at 97, the monthly candles looking pretty ugly, and of course we'll cover the liquidation levels and the areas with highest likelihood for the price to hit if we continue with the downside. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Thanks so much yesterday for the almost 6k views in this video. Sunday Alpha is back with analysis and alpha, not just for Bitcoin, but also for Ethereum. 37 minutes that you don't want to miss. Today's video is going to be more focused on what's going on right now with the price and the markets. I'll cover the general markets, dollar and gold as well. Try to find an explanation for the apparent bearishness in the market. And thanks so much for the 917 likes that we got in the video yesterday. I was asking you to support the channel. I'm gonna do the same today. Every time I do it, it really helps the channel. A like, a comment, sharing on social network, that is really appreciated. And don't forget that I'm keeping you up to date on Twitter, Telegram, and Instagram. The links are in the description, including the low quality breakout that we had yesterday, the failure, and the big milestones like when we are testing support. I try to cover all of that, which is usually related to what I mentioned in the videos. Interest in Bitcoin continues to decline from retail. That typically signifies opportunity, as I've been saying in a week. So although many people are bearish, the fact that so much retail has left that we've been seeing in multiple indicators, watch my video yesterday for more, tells me that there has to be opportunity somewhere if all retail really left. And now we can see that January is in red together with December, which is pretty much doing the opposite that we were saying. We said October traders take it for granted as being in the green. September tends to be in the red, but September was in the green. So first thing, that was an anomaly, which could tell us that maybe we got ahead of ourselves too much by having such a positive September. And then what we say is November tend to forecast what's going to happen in the 3 upcoming months, even up to March. And we have a 37% November that was very promising towards December and January. And now we get at December and January that are pretty flat, slightly in the red, at least for now. Going quickly here at the comparison between 2025 versus the past cycle. In a very short summary, I was expecting to see from this A-V move here a C wave correction into this pocket between 0.7, A6 and 1, which is more or less where we started bouncing in the past cycle. Things are very different to the last cycle, but some things are resonating. So I believe that it's still worth using past cycles just as a reference, source of ideas, but not necessarily to play them by the book. And that's why I say that even though we could see the same performance and enter with the C wave up until the same pocket we did in 2021 in January, it could also happen that we go to the Watt 618, which is located at 75k roughly, or it could happen that we don't break below the 91.9 and we continue to rally. And that's why I have a position at the moment that I enter at 91.8 that I'm still holding. My idea is to add in this pocket and in this pocket and look for some move up, depending on how many orders I have filled and the bearishness of the timing. Then I might need to adjust my exit. If we broke up from a pattern like this, from the upside, that will be extremely bullish and promising to get a performance similar to this, like if you break out from a flag. Therefore, my targets are beyond the 110k. Entering in here, it's also bullish because we recover the range. But if we enter here and we fail, then you get a full Bart Simpson, which is not great. And if we go to 75 and we start bouncing like this and I need to add a lot more, well, each and every extreme situation requires for being flexible and adapting the strategy so we can always benefit in some way. On the 4-hour, at the moment, we saw that we broke down below the support, and I have seen this a few times in the 4-hour, which is lower quality than the daily, which is you break out to the upside and you fake down. And then you break down and then you fake out now to the upside, which is really annoying. But on the 4 hour, you need to be prepared for a little bit more of fun. And I'm not saying this is confirmed as a fake out to the downside. It's too early to say or confirm anything on the 4 hour at the moment. Let's look at the daily. There's a lot going on in here in this chart. For example, we have the low of the 5th of December. That's the lowest low in all this range, with the exception of from where we enter into this range. Today, we put a low relative to that, just a few dollars lower at 90.292. So that is again additional weakness into what's going on. So far we are aiming to protect the past week low, which was 91.250, and that's why the 4 hour is re-enter into the previous range. The lows of the range based on volume profile are 89.6, and we have this order block there that coincides with all the liquidity pools, stop losses from longs and account liquidations. This is the area that I keep looking with one eye every time I aim for any upside, because it's very difficult to ignore. I cannot really get hooked up into just looking at the upside with all these liquidity pools without saying anything about this that is right next to us. I don't take for granted either to take it, and the proof of that is my entry at 91.6, 91.8 actually, but the fact that I leave orders in this area is how I adapt my strategy to all these liquidity pools being there. The shorter term liquidity has been taken on the red. There's still plenty of lower levels. There's one red very small at 90k. We are very humbly bouncing in here, really nothing, so this could continue dragging and taking the remaining part and eventually entering into this red, which could produce additional volatility. Think about it as those are stop losses that turn into market orders as soon as they get hit and can cause cascade of events. On the daily RSI, we are putting also a new low in here. That is a candle in progress, so I still don't know if it's a lower low. We could close it higher or not, but we are risking to put a new low, which is again additional weakness in the market. Coming in as levels of support that are important in the daily RSI, we have 35 coming from the PNR and we have the 30. PNR is statistics from percentile nearest rank applied to the range of the RSI, and this red support comes from the support from August that we have respected so far 100%. So those two levels, 35 and 30, are very important, and that's why I'm tracking them with the reverse RSI. Now you can see that the top one, which is corresponding with the 35, it's aligned with the order block. So that's where we start having the party of liquidating longs. And the 30 corresponds with the end of that. That is located at 83 in the middle of this fair value gap. 83 is somewhere in here. So we could say 83 is where we finish completing this whole hill of liquidity, which is larger than the second hill and still larger than the third hill, although the third hill looks a lot more similar to the first one. Let's put numbers 1, 2, and 3. So I think 1 is very likely to get taken. Number 2 coincides with the CME gap that we have produced on 11 of November. And number 3 at 69k is the previous cycle all-time high and coincides with the VWAP if we place it right where this whole structure starts in here. Some other people think it is also relevant because if you place a line with the resistance, more or less, that will look like coming into the scene of the crime, right? Somewhere in here, right after the breakout that produced this move. I'm also interested to know what will happen if the daily RSI visits those levels in here. What is the cross-fee ratio gonna say when we get there? Is it gonna be into the green, or is it still gonna be a little bit above it? Being in the green, typically on the daily basis on the cross-fee ratio, we tend to get very good bounces to the upside, not all the time, but in confluence with other indicators, it could be really helpful. Now, on the monthly time frame, if we take a snapshot of the look of this, it really looks like the end of the world, but we have to agree that January is still not completed, and this can mean anything. It could mean that we could reverse from there to the upside, or it could become even worse. Large whales continue in accumulation with more withdrawals than deposits. What whales are doing, always take it with a grain of salt. Remember that whales have big pockets, and the fact that they are withdrawing doesn't necessarily mean that they are using all their capital and withdrawing it into Bitcoin. They can remain in a downtrend, adding to their stock for a long time until the price starts recovering, and then they start distributing. A good example of this is that at this point we reach 0.26, the lowest ratio. That means that it was an extreme amount of withdrawals from whales when the price of Bitcoin in the bear market was at 19k, and that's because that area in here for whales was too close to the bottom of the market, and you can tell that we still were expecting to have another sell-off with the FTX collapse, so they didn't necessarily time the actual bottom, but they say, okay, this is good enough and let's start accumulating like mental, which is what they do in this area in there. Currently they are at a ratio of 0.5, which is pretty good and in alignment with what we were doing in this area of the price in 2023, and we are far away from excessive distribution from big whales. The ones that have been selling a lot is retail. And yes, we closed the candle weekly last night at a level of around 64 on RSI. That confirms the rejection from the yellow line that we've been using throughout this whole bull market. I still remember placing it like this initially and then extending it, and it's still relevant up until today. We just had to do an update to make sure that it aligns with the most levels as possible. This week we are starting on Monday with a new candle moving, pointing down towards 60, and I want to remind you that we lost this level in July in 2024, and then in 2 weeks we went to the scene of the crime to hit it as resistance. So when you are at these lows, you might think it is the end of the world. At that point Bitcoin will have hit 53k, and you might think, oh, this is the best time to sell, and then suddenly you get 2 weeks in the green, hitting 69k with this test of the scene of the crime. So what I'm currently thinking is, what if after closing this week, let's say next Sunday, we're still pointing low, then there could be a chance that we come to the scene of the crime, this time at an RSI of 69.68. And if we did that, the price of Bitcoin at the moment is pointing at 106. And tell me, how many people will get wrecked with a move like that if next Sunday the RSI on the weekly is still pointing down? At that point, everyone will be pretty much convinced that we are going to 50 to 40k, enter in shorts and do all of that. And don't take my word for it. As we do more videos this week and you continue to watch them, we're gonna look into how this area in here evolves in terms of liquidity pools. And what we want to achieve to succeed in that potential speculative move is to get all of this in red. We want to trap as many shorts as possible, heavy, high leverage in this area, getting us a sweet red, not continuous because that's too much to ask, but a few elements that create a bridge between where we are, the vacuum currently, and then the next red that is above the previous all-time high. If we succeed on that, we could get a pretty decent bounce back up. At the moment, we are observing. We're going to continue looking at the charts and using data to trade better than most of the people. Let's have a quick look at trading at high block capital. Number one, we are currently seeing a spike in the funding rate. And I think that together with what we are seeing here in the order book, which is lots of bidding, could be explaining why we are seeing this small move to the upside. Remember, in this area in here, we also started seeing the bidding. We also started seeing the funding rate, and we have a nice move up of 4%. We are breaking structures in here, sure, but we are trading levels of support on the daily, and look at how many times it has happened that we've been below and then we reclaim and go up. And that's what I mean by telling you it's increasing the chances to come here, but don't take it for granted, because by the daily close, if we close above it, we still have a chance of another move like this, and we could even do that for a long time. Anything is possible, and we need to be adapting to those things and never trade a single idea in a single way and then just get disappointed that things didn't go as you wanted. Flexibility is a great attribute that you need to practice. As human beings, we are prepared for a single goal and objective and single master plan, which we marry. We get in love with the plan. In trading, the moment you fall in love with a single plan is the moment you make yourself the worst trader possible. And I get people watching the videos get super frustrated when I say X, Y, and Z can happen. What they want is me to tell them, just do this, buy now and sell at this price. Because for human beings, that's the easiest way to do things. One instruction, one outcome, success, happiness. In trading, it doesn't work like that. Delta currently is in the negative, so if I was trading just using high block capital in here, I will be slightly bullish just because of the data. Remember, the trend and the other things are making it a lot more difficult for this to go too far. So adapt your expectations to that as well. And the order book shows that the last time that we went to 91K, there was a lot of demand in this area. We can confirm that in here with this demand on the 9th of January, the orders were placed slightly below it at 88. That is this bidding that we can see increasing and turning into a reversal. Now we have this bidding at similar levels, now at slightly lower prices. We have as well the funding rate, but in the order book from FireCharts, I see that liquidity a little bit more diluted compared to this. So my first reaction to that will be, has it moved lower or did they just pull it out? And I cannot find it anywhere. It hasn't even moved above the price, maybe a little bit here to short 100K, but it's not really evident what has happened with that liquidity. It just became thinner after the weekend, which could indicate indecision at the moment. In terms of the delta, we are seeing a delta of longs versus shorts, slightly below the previous range in here. It's good to not be in the green, and opportunities usually occur when the delta starts going too far away from the previous range. We use levels of support, resistance, breakouts, and anything we can at hand to identify potential opportunities to re-enter. At the moment, there is no evident alpha from this. Levels of liquidations in the last 30 days. We got below the price that 90.2K, sure. And then we have this chunk 96 to 97. That's where we identify the CME gap. We couldn't take it yesterday. We went to 95.9 and we left on the table this. So they won the battle so far, but eventually we're gonna take them. And then after that, we still have the 103K. As you can see now, we have the whole range paved in fair value gap. Someone was asking what is a fair value gap. Sometimes I explain it, but I don't want to repeat it every time. A fair value gap is if you look at a candle on a specific time frame. For example, in here we are in the 4 hour. If you see the body of the candle not overlapping with any candle, the one before or the one after, that creates an imbalance because orders that were placed there were never attacked by any wick, and as a result there is liquidity to be taken there to produce a balance, and that acts as a magnet of price and is very effective way of using it to target your exits or entries depending what's your strategy. And I think it's very positive to see all these fair value gaps in a continuous deployment that can make a lot easier to reach levels of even 105K. Watch my video yesterday with the update on what the Fed are doing because they reversed this thing and that has implications for Bitcoin. I'm talking about the video on Sunday in my channel. And in terms of liquidity, no news from global M2, neither from China. They have reduced quite significant the liquidity, and the liquidity in crypto is also coming down in here, similar to what we did in April 2024. Let's hope that that eventually is going to reverse and we're going to have another hill of liquidity. With liquidity, assets start doing really great. And I promised I was going to cover general markets. We made a high of $110 on DXY. That is mind-blowing and really bad for risk on assets, but in general for most assets. Gold as well broke out from this symmetrical triangle. In here, the weekly candle closed at 2690 and started the weekend coming back down as what someone could say this is a potential retest of the breakout. it's doing that against the momentum because gold lost the momentum in here on the 4th of November. So in theory, it's got less likelihood for this breakout to actually succeed. And I think this is a reaction to all the fears that we have in the market, and people are running in circles thinking, where is my safe haven if shit hits the fan? The VIX is confirming what we said a couple of weeks ago when we had this breakout on the RSI. This is the volatility S&P 500 index. We broke out on the 16th of December. This was calling for additional volatility, typically to the downside on general markets. It came here to do a retest, and it put a new high at 58. You can see that there is a gap now opening the week at 21. This is elevated risk of moves to the downside in general markets. Nasdaq is still showing me the week from the previous week, so we need to wait until market open. S&P closed the week again at the lowest of the range. Remember that Nasdaq has this hive signal pointing towards a target of 19.6k. S&P is in a channel to the downside, and Nasdaq is kind of in the middle of nothing. I cannot really interpret this RSI on the weekly. There is a potential support from this trend line coming in at an RSI of 51. We're very close at 55, and if we got there, that will take the price to 20.3k, which is the high of July. One of the things I was thinking this morning is that in 2017 we got a cycle that is pretty much too perfect, and I'm going to explain what I mean by that. You start with a double bottom, a perfect double bottom, and then you see a line that goes parabolic into a blow off top. It stops almost at 20k, and yes, there are corrections, and those corrections are 35% or whatever you want in the way. But to me, 2017 is it's like that guy in the class that always gets the best marks in every exam. Every teacher uses that person as a reference, and you kind of get jealous because it calls all the attention. And indeed, in the cycle after, you get kind of the black sheep, because this starts from a bottom information that starts too early, gets some hiccups, it gets sick, it finds a double bottom that is a little bit funky because they are not very close to each other. This is at 3k point something, and this is almost at 4k, and the whole move to the upside, everybody was waiting for a blow off top. And what 2021 did to investors was to make them focus on all perfections in here, starting with the double bottom perfect, and then with the move parabolic with blow off top. I cannot convince you of how many times when I was watching or reading any influencer in 2021 at these prices, how bullish everyone was about the blow off top, that we still don't get it, that it should be at 150k. And what we got is this crash. And what this crash did to the market was again based on the point of reference, which was this crash. You get a top on 25th of December, and all the way here, there were plenty of people thinking, oh, maybe we're gonna get another move up, and this is just a moment to take a breather, and let's just hold and wait. The actual capitulation happened on 12th of November 2018, and you get an additional 50% down. So everybody that was in this area in the middle of 2021 were expecting this move to happen. Therefore, retail sold this, and as soon as they were done selling, the market put a new all-time high at 69k. And that's why 2021, the shape of these areas in here are all a consequence of the shape of the price in the previous cycle, because that's our point of reference, and people are trading with psychological arguments, right? I am scared that we're gonna get this, and people here didn't want to sell because they were scared that they're gonna miss the blow off top. So you need to think to ride this area in here. Where are the fears? What are the things that based on 2021 could play completely different? Well, I hear a bunch of things. People are constantly talking for the double top, and that's natural, right? We get this top in here, and there are the second group of people talking about the blow off top. We need to get a blow off top, but maybe we don't get it, and we get a double top. And I think there is another element which people didn't control in here, which is the COVID crash. And the COVID crash in this cycle came to spoil the perfection of 2017 prior to the halving event. Right there, a few weeks before the halving COVID crash. So we got the argument that the halving was gonna save the day. And I believe in part that's what it did. Of course, together with the liquidity additional in the market, pretty much anything can pump. But what if this cycle we got something substantial happening to the market, something that affects global markets, that causes big fear, maybe not as big as COVID, but kind of somewhere there in the range of big things. But this time is happening when we are almost 70-80% completed with the bull market of Bitcoin, at least price-wise. And people are going to look at 2021 and are going to think, well, when you get a black swan event, you get a V recovery, and then you get a rally from bottom to top of 1,600%. That is the takeaway that people have at hand. And unfortunately, things are never that easy. So if you get a black swan event and you crash to 50, I wouldn't expect that from 50, we're going to do a V recovery and a further rally like that. I think it's wiser to assume that potentially if you get something as big as that, all you get after is a dead cat bounce. And that is not my forecast. That is just one out of many examples I could give you of different performance that you can get that are designed based on the opposite that people are expecting based on what they have at hand. And what they have at hand is 2021, 2027, the recovery from a black swan event. That's the only large global scale one that we have had. But we haven't had recession or other things on our plate almost at the end of a cycle. So no one, including myself, can really tell you how is that going to affect price. But all I can tell you is that the way that it will do it must disappoint 90% of the people. Otherwise, your guess is not as good. Guys, if you want to trade Bitcoin, Ethereum, or any altcoins, and you want to do it in a top-notch exchange, I have two choices, Bybit and OKX. Either of them is offering substantial bonuses for signing up using the link in the description. And with those links, you get also reduced fees to trade. If you want to stay away from trading, needing to do KYC, then consider doing it on one of my two non-KYC exchanges, starting with Bluffing and 2bit. Notice as well that I have a new promotion on Bluffing. If you open an account using the links in the description, even if you have the lowest trading volume, you can claim the gifts that I'm showing you on the screen, up to a Rolex watch, as you can see at the bottom end in here. Thanks so much for watching, and I'll see you on the next one. Bye bye.